Mario Draghi sent the euro on a bit of a wild ride today. How can we trade that kind of action? A very good evening to traders. This is Mark. Welcome to your daily trading video. Well, Mario Draghi came out of, first of all, ECB did absolutely nothing. This is looking at the euro US dollar here. ECB did absolutely nothing as expected, but Mario Draghi in the Q&A saying some things and just caused a little bit of action in the euro. But first of all, I want to point out that it doesn't matter who this is. This could be Yellen with the Fed. It could be Kuroda with the BOJ, Bank of Japan. It could be Mario Draghi with the ECB. It's the same thing every time. If there is no dramatic surprise, then expect this kind of action. And if you look back on the last 15 or so events, whether that is FOMC, whether that's ECB, whether it is the Bank of Japan, you'll see that the majority of the time this is what happens. It's a pure liquidity hunt, stop hunt, chop, however you want to package it, but it is purely that. It's just movement. It's nothing. There's no reprice here. If you've got a genuine reprice, you will get far more than 5 minutes. This is a 5-minute candle. You will get far longer than 5 minutes to get on the trade. It will push and push and push and push and push. Then you'll get your pullback or your tight bull flag or your shallow pullback to like a 10-period average or something if you want to frame it like that. And then you can get long. It's a negative expectancy to be taking buys after 5 minutes on trades like this, especially for big releases like FOMC, BOJ, and especially when there's nothing very surprising going on. And honestly, if it was something really surprising and really market moving, that bar would be much, much longer than that. You wouldn't just get that in 5 minutes. You would just get an absolute ripper. You get 100 points or whatever it may be. You just get a phenomenal bar. So first things first, you can say, listen, 5 minutes to do that. This is nothing new coming out, okay? Regardless of whether you're listening to it or not, regardless of whether you're an economist, regardless of whether you care, purely from a technical perspective, that bar is nothing. It's not a sizable bar in the terms of what you would expect for a really genuine, really decent move. So, how do you play it? Well, the first things first, obviously, is you just don't chase. You don't chase it because if you're going to buy, you just give it time. Give it time to prove itself. So what's another strategy? Well, something I like to do is put this, it's not a Fibonacci, but you can use a fib. It's very similar. I just split it into quadrants. I prefer to split it into quadrants. Personal preference, there's no right or wrong with that at all. So as the market's pushing up, you start to bracket and you say, okay, well, there's my low at that level there, and there's my high, that level there. Okay, so if we start to pull back down and start to pull back under this 50% retracement, and in fact you can put another line here and say if we start to push down below that, then we may well have a retracement trades, and the obvious place for that to go is to take out the stops under this low. That just becomes a natural place for the market to trade. If it can push up and there's no buys up here, then what's it going to do? It's going to push down, especially we've got this sort of pivot around this 1.1 level. So how do you frame it? Well, the main thing about picking trades, whatever the setup is, it may look like the most stupid setup in the world, it may look like the most least profitable, whatever. Now, we know that this, when we're looking back at 10 or 15 events, we can see that this is quite a common pattern. So how can we structure it? Or we can say, okay, well, this is quite a common pattern, so I need to find a way of just literally quantifying my risk and giving myself a decent risk-reward ratio and trading it systematically. So something like this, as an example, you can say, if we push through here, then that is when I'm going to go short, and my stop is going to be here, and my target is going to be under the low. So you've already given yourself a decent chance with a decent risk-reward ratio. Plus, you're also going back and saying, well, actually, this pattern is quite a common pattern. That's the basis of a profitable strategy. Or choose it however you want. Perhaps you want to do it 25% from the high and bracket it. It doesn't really matter, but accept that this isn't going to be your retirement strategy, but it's the sort of thing that if you're prepared to risk a little bit of a capital on it, and you've got a systematic way of approaching it, then look back at the patterns and say, well, this is a pretty common thing. Why not trade it? So it's trading is all about structuring and looking at a decent place to take a view while you've got a cap risk. Now, obviously, the danger of this is that you're going to get caught. It's going to get chopped around. It's going to ping you out. It's going to go low. If that happens, accept it. Accept it and move on and say fine. But more often than not, you get the vicious spike up, you get the vicious spike down. As long as you're broad enough with your stop not to get caught in the 1 minute noise, then more than likely you're going to come down and you're going to take out those stops at the low. So it's just a scalp trade. It's just a way of a little idea. And as I say, BOJ, ECB, Fed, even Bank of England, all the same type of central banks. This is the sort of thing. When they say not a lot, this is the sort of pattern you get. Anyway, hope you had a great trading day today, guys. Some other stuff going on, but we'll focus on the euro today. Maybe do some more stuff tomorrow. Take care. Have a great evening.